index provider FTSE Russell gave final approval on Monday for inclusion of Chinese sovereign bonds. They will be included in the FTSE World Government Bond Index from the end of October and will be phased in over 3 years. This sets the stage for billions of dollars of inflows into China. Chinese government bonds are already included in indices like JP Morgan and Bloomberg Barclays. But FTSE World Government Bond Index inclusion is expected to have a larger effect due to the size of passive flows tracking it. HSBC estimated with roughly $2.5 trillion tracking the index, some $130 billion in inflows could be expected, given China's eventual 5.25% weighting. The 36-month phase-in is longer than the one-year process FTSE had flagged in September.
That actually means a comparison of investment into fixed income stuff across countries. That if you invest in Chinese treasury, you get like 3.5%, and you invest in US treasury, you get 2%. Then that will be a decision for traders to make.
Chris Woods, head of policy and governance at FTSE Russell, praised China on its reform efforts and will continue to work with the PBOC to ensure the reforms will continue to yield improvement to market structure. Pan Gongsheng, deputy governor at the People's Bank of China, welcomed the move and said in the FTSE Russell release that the central bank would work actively to promote the further opening of China's bond market to international investors.
And that actually means a lot to China's currency, because in that case, more countries, more foreign reserve, more companies will take China's currency as a kind of reserve currency for themselves, as a trading currency, etc. So that means that the Chinese financial market will finally open to the world and be connected to the world.
Chinese government bonds are already becoming increasingly popular with global investors due to its yield and its relative insulation from movements in other bond markets. Foreign investors held a record of around $318 billion of CGBs in February. Benchmark 10-year CGBs yielded 3.2% on Monday, compared with a 1.7% U.S. 10-year yield.